Hi everyone, welcome to another video by Stock Trades. Today, we're going to be looking at some top investment choices for investors to consider for the month of July. My name is Matt, and we'll get right to it after this. Before we get into our top picks for the month of July, let's take a quick look at the state of the markets. So far, so good. Ever since touching lows in mid-March, the TSX index has rebounded quite nicely. In fact, it ended June up 1.83%. This marks the third consecutive month that the TSX has posted positive gains. It's off to another good start in July, and it seems that there is no stopping the markets. Unfortunately, we believe this is a little bit too optimistic. The reality is, the second quarter results are still yet to come, and we do believe that these will be much worse than last quarter. They will represent the first brunt of the full effects of COVID-19 mitigation efforts. We are also on the verge of a recession, if we aren't already here. The Government of Canada expects that GDP will shrink by approximately 3.9% before rebounding by 3.4% in 2021. This means that we won't yet return to 2019 levels until at least 2022. That means a couple of years of flat to negative growth. This isn't anything to get excited about, and this isn't anything that should be driving the stock market to all-time highs. That being said, there are some clear winners, gold sector being one of them. Gold is nearing all-time highs, and this is not surprising considering the amount of money that the Feds are pumping into the market. This should sustain the price of gold, which is why one of our top stocks is Endeavour Mining. Outside of the rising price of gold, one of the reasons why we like Endeavour Mining is because of its recent acquisition. On July 3rd, it closed on the deal to acquire Samafo. Now, I have no idea if I'm saying this correctly, but Samafo used to trade under the ticker SMF.TO, and it is a leading African gold miner. The company was chronically undervalued, and in fact, it often made an appearance on Stock Trades Premium Top 20 Growth Stocks. That is before Endeavour swooped in and scooped up the company on the cheap. Now that it has integrated these assets, Endeavour is looking at forward productions of over 1 million ounces at all-in sustaining costs in the about $800 to $850 per ounce range. This is an excellent asset profile. The new combined entity is expected to be a top 15 gold producer worldwide. As of writing, the company is trading at approximately 7 times forward earnings, and it is trading at a 26% discount to 1-year analyst estimates. Likewise, it is trading at a PEG, so price to earnings to growth ratio, of only 0.2. This makes it one of the cheapest stocks in the gold industry. Endeavour is expected to grow earnings by approximately 50% annually and revenue by approximately 40% annually over the next couple of years. This makes for a very attractive growth stock. Likewise, analysts expect that the company will introduce a dividend. It's only a matter of time. The company is generating strong cash flows, and it is well positioned to introduce a dividend over the next year or so. All things considered, the market seems to be undervaluing Endeavour's assets, much like it was undervaluing Samafo's assets. Part of the reason for this is likely that it is operating in Africa, so it has a higher risk profile. However, it has a very strong asset base. We believe that it is only a matter of time before the markets readjust and value Endeavour accordingly. Next up on our list is Capital Power, a mid-sized utility renewable energy company. Capital Power has underperformed the markets in 2020. It is down by approximately 20% and is one of the few utilities that hasn't outperformed the TSX index. So what gives? Part of the problem is that Capital Power has a high exposure to Alberta. Given the low price of oil and gas, there is a negative sentiment toward utility companies in Alberta. See Canadian Utilities and ATCO as perfect examples. However, investors are discounting the fact that Capital Power has been aggressively diversifying outside of Alberta, and it has 80% of its earnings contracted. This is a company that is generating considerable cash flow and is one of the fastest growing utilities on the TSX index. One of the reasons why we're adding it today as a top pick for July is because the company is scheduled to release quarterly results at the end of July. It's important because at this time of the year, the company typically announces its annual dividend raise. As a Canadian dividend aristocrat, the company has a 6-year dividend growth streak. All things considered, Over the past couple months, there have been very few companies which have raised the dividend. In fact, cuts have outsized the number of dividend raises. So all eyes will be on Capital Power when they release earnings on July 30th. Will the company raise the dividend? Well, it hasn't indicated otherwise just yet. In fact, it seems well positioned to maintain and meet expected cash flow targets. This means that the company is likely to execute on its targeted 7% annual dividend growth, which is expected to extend through 2021. If the company raises dividends, this may be a good catalyst to send the share price higher. And it has room to run because it is one of the most undervalued in the industry. It is trading at a 30% discount to analyst estimates. It is only trading at 15 times earnings and 0.8 times book value, significantly under the industry averages. Finally, it has a PEG ratio of only 0.8 and is expected to grow earnings by approximately 20% annually over the next couple of years. In our opinion, Capital Power is the perfect blend of value, income, and growth. Last on the list for the top stocks for July is BRP, a leading manufacturer and distributor of all-terrain vehicles, watercraft, personal watercraft, and snowmobiles. You'll know them under the brand name of Sea-Doo, Ski-Doo, and Can-Am. Pretty high-profile names. Unfortunately, COVID-19 economic mitigation efforts have essentially sapped up demand. At least, that was the initial fear. And those fears came true. As per the company's presentation, you'll see that demand dropped considerably in the second half of March and in the first half of April. However, a funny thing happened. In the second half of April, demand actually shot upwards. Year over year, it increased by approximately 20%. Other information coming out of the US indicates that personal and power sport vehicles are actually doing quite well during this pandemic. So why is that? Likely because families aren't traveling. They're staying home. And by staying home, they are spending money on things that they can do nearby, such as ATVs, four-wheeling, boating, those types of things. In fact, personal anecdote here, my father went and bought a new fishing boat, and in talking with the dealer, they had mentioned that they haven't been this busy in years. In fact, they had a hard time keeping up with demand as supply was tight. So I think that people are underestimating just how much individuals are spending on personal power sport vehicles. And I think that BRP is well positioned to rebound in a big way, so long as the economy continues to rebound and continues to track the way we are tracking. Likewise, the company suspended the dividend back in March. Once things were really bad, it suspended the dividend completely. One catalyst that has the potential to send BRP's share price higher is the reinstatement of the dividend. Back in late March, BRP was one of the first Canadian stocks to suspend the dividend. It did so amidst all the uncertainty. It wasn't clear what type of economic impact that the COVID-19 would have on sales and demand. Now that we're starting to get a good idea, let's see what happens over the next couple of months. I'm not suggesting that BRP will jump and reinstate the dividend immediately. There still exists a considerable amount of uncertainty. However, the way we're trending and the way the economic rebound is happening, so far it's looking pretty good. If the economy continues to do well, there is a chance that BRP reinstates a dividend by the end of the year. Now, this might be a little optimistic. However, all signs right now are pointing to a strong economic rebound. This could be a strong catalyst for the company moving forward. We are big believers in BRP. In fact, it was one of our bull list picks last year, in which it gained approximately 40% over a few months, at which time we removed it from the bull list due to valuation concerns. Now, we do believe it is fairly valued, and it might be a good opportunity for investors to look into taking a position. And with that, we're at the end of our video. Let's recap. Endeavour Mining, Capital Power, and BRP. Both Capital Power and BRP have near-term catalysts that can send their share price higher. Endeavour just completed a very underrated acquisition. We believe all three are attractively valued and can provide excellent returns over the medium and long term. So thanks for watching, and as usual, please like the video and subscribe to our channel. And please let us know in the comments, what are some stocks that you're looking at buying in the month of July? We want to hear from you. Thanks again. Till next time.